Welcome back, and joining me for a closer look at what's played out on the market scene today is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. Investors had been waiting for clarity on the Trump tariffs, and we have gotten those 25% on imports from Canada and Mexico and an extra 10% on Chinese goods. The markets, they're feeling the pressure. Talk to me about the kind of volatility and kind of dent in sentiment that we're seeing now.
Yeah, and I think for me it's more of a knee-jerk reaction. Remember, we knew about all these things,
Yes.
even when he was campaigning, even when he was giving his inauguration speech, stuff like that. And anyway, even in his first term, we know this is what he has done. So I think markets should have been more prepared, and even the numbers, we didn't get a shock because these are the kind of percentages that the guy has been stating. And as well, it was expected, that it will be a tit for tat kind of a situation. So volatility will continue. And for me, I think the kind of volatility that we should be worried more about is the issue when it comes to the Fed going forward, because we are not yet sure whether it's going to be 2 or 3, stuff like that. So that's how market decided to react to all this. And I hope it's just a knee-jerk reaction, because someone said, if you look into these tariffs, ultimately they amount to almost one of the taxes that the US have seen in generations. I mean, if you look into an average US household, we are looking at an increase of almost 1,200 US dollars per annum. So that's kind of huge.
Well, something that is not huge is the economic growth in South Africa. For the fourth quarter, we saw 0.6% growth after a 0.1 contraction in the third quarter. For me, it's still surprising, Makwe, that we're still having this benign growth, considering that we didn't have load shedding for the majority of 2024. What's your take?
I think the issue of logistics continue to be an issue, infrastructure that still needs to be improved. And you are right, we expected an increase of almost 0.9%. And unfortunately, this kind of numbers are not going to be helpful when it comes to reducing unemployment. But let's hope that the GNU continue to hold and accelerate all those reforms that are required. And at the same time, had to deal with the issues of the tariffs going forward, but hopefully that we get our policies in place to make sure that we've got a better and decent economic growth going forward. Then we're not going to have issues when it comes to the tax collections or how much we are able to collect versus what we're spending. But yes, 0.6 is not what we thought we'll get. But anyway, I guess in these circumstances, we can just accept and celebrate any good news. Hey, we didn't tilt into a recession. As you said, Q3, we had a negative 0.1%.
All right. Well, let's take a look at some of the company news that are out. ShopRite continuing to outperform the economy. We did have those interim results coming through. Revenue and also the bottom line up by almost 10%. We did have them also increasing their dividend by 6.7%. I saw a slight dip of 1% on the ShopRite share price, but I'm sure that's not significant, right, Makwe?
No, not at all. The results, I think they were good, but I think we're expecting a lot coming out of Checkers itself. And as they've said, we know that they're well entrenched when it comes to the middle to lower LSM. The question is, as much as they've been getting a little bit of market share on the higher LSM, what is it that they'll be doing to make sure that they also become a force to be reckoned with when it comes to the higher LSM? And I think gradually they're getting there, I mean, for the fact that their customers are seeing them as the preferred partner when it comes to those discovery, vitality, health food kind of a story, for their vitality points. So probably maybe that will help going forward. But I think now they have to start focusing more on getting a better market share when it comes to the higher LSM.
Well, talking about vitality, let's go into Discovery, because they also came out with their 6 months results today. Double-digit growth, looking at metrics such as normalized operating profit, headline earnings. They also declared an interim dividend. The stock inched up at 2%. Of course, we had seen a bigger increase in the share price when they released their trading update last week or a few weeks ago. A healthy set of numbers there.
It just proves that, investments that have been putting together, they're starting to pay off. And also the very favorable experience when it comes to claims, that is mainly on your Discovery Life, your Discovery Insure, and also increasing the usage of the finance for the reinsurance funding on Vitality Life. And that helped to mitigate, the impact of any dilution coming from Discovery Health.
Well, let's look at the dynamics of Nedbank because, of course, banks had benefited from the high interest rate environment, but seeming that that growth now is becoming muted. But they did put out a headline earnings increase of 8%, also widening of the return on equity, share price climbing 4%. Numbers to celebrate?
I think so, I mean, revenue up 4% because of higher fees, and the issue about interest rates, we've seen that the lower credit losses, which also help to decrease impairment charges. So not too bad. And I think the guys started doing much better when it comes to almost after we had the GNU, when we started seeing our interest rates going down, inflation moderating, because the first part, when we had high interest rates, high inflation, that, and also coupled with geopolitical uncertainty, that was not favorable for them.
All right. Well, something that is favorable for you, Makwe, your stock pick for today. What are you choosing?
I think I'll go with ShopRite because I strongly believe that they'll do something to make sure that they also have a good presence when it comes to the higher LSM. Yes, the PE of 20, you can easily say is demanding, but given the revenues that they're creating, I think they'll continue to do well, given that we continue to spend most of our money on food.
All right. Well, thank you so much for your time and for your insights today, Makwe. That was Makwe Masilela from Makwe Fund Managers.